Things are getting very interesting for Bitcoin and especially with its mining, as this is something that we haven't really seen for about 14 months. This is an article from Cointelegraph detailing more on this. I will be sharing my own opinion. At the end of the video, I will include a link to this article in the description. I am not a financial advisor. This is not financial advice. Everything I'm sharing is my own opinion. It's my own research. I highly encourage you to go do your own research. And with that being said, let's go ahead and dive on into the news. Title is Biggest Mining Difficulty Spike in 14 Months, 5 Things to Know in Bitcoin This Week. Macro forces are brewing, while Bitcoin network fundamentals defy the bears. Which side will win out when it comes to Bitcoin price action? Bitcoin begins a new week still under $20,000, one which promises to give traders the excitement they have been looking for. After another very similar weekly close, Bitcoin USD pairing is still waiting for the breakout from its multi-week trading range. The move has been long in the making, but so far, the market has lacked the catalyst to make it happen. Support and resistance zones have remained unchallenged. This week, that might all change. The list of economic data prints due in the coming days is impressive, while geopolitical instability is gathering momentum in Europe as the conflict between Russia and Ukraine escalates. At the same time, Bitcoin is due to show its bear market intentions as the time nears when, historically, macro price bottoms are formed. A silver lining for the bulls, meanwhile, comes from internal sources, with network fundamentals due to make a giant leap higher on the first Wall Street trading day of the week. With so much to take in, Cointelegraph takes a look at the key issues to keep in mind when planning one's Bitcoin trading strategy in the coming week. So volatility pointers say rare price action due. The weekend was plain sailing for crypto market participants, data from Cointelegraph Markets Pro and TradingView shows. Despite the added potential for fakeouts thanks to reduced liquidity, the quote out of hours status quo remains similar to that of previous days. Limited movement within a familiar trading range. The weekly candle close, coming in at just above $19,400, was also no surprise, although it was Bitcoin's highest since mid-September. On 1 week timeframes, Bitcoin USD thus continued to form a cluster of candles in which the market hardly moved up or down at all, a classic sign that volatility will result. That breakout event has already been forecast on lower timeframes, these coming true on Friday as United States job data sparked a brief sell-off which cost bulls the $20,000 mark. Now analysts are looking for a repeat performance over more significant periods. Very unusual to see Bitcoin squeezed at historical low volatility levels on rising volume, trader and entrepreneur Jordan Lindsay told Twitter followers as the week ended. A big move up or down is coming. Lindsay was referring to a narrowing of Bitcoin's trading range coming in tandem with trade volume rising, the latter a key component of sustained breakouts. That thesis is currently being supported by the Bitcoin Historical Volatility Index, also known as BVOL, a dedicated indicator for tracking volatility within its historical context. Currently, the BVOL is at lows, seen only a handful of times over Bitcoin's existence. A notable comparison is October of 2018, just 2 months before the previous cycle's bear market bottom of $3,100. It has been below 36 level 2 times in the past, and after which we saw a very big movement in market. Trading account Crypto Vikings commented, adding, currently it's below 36 level again, and it indicates a very big movement is coming soon this month, or most probably in November. William Clemente, co-founder of digital asset research and trading firm Reflexivity Research, described the BVOL data as, quote, worth nothing. As such, any violent exit of the range could equally be down as well as up. Fellow account Livecoin nonetheless noted that Bitcoin USD has a historical habit of consolidating longer than the market wishes for when volatility is so low. Bitcoin hit levels of low volatility not seen in 2 years. The trader and investor told Twitter followers on October 9th, adding, quote, while it's reasonable to expect a large move now more than ever, it's also important to note that there were 2 periods in the past when Bitcoin spent more than 40 days consolidating after hitting these levels. In the meantime, however, an eerie calm is perhaps the best description of the atmosphere surrounding Bitcoin. As summarized by popular trader Matthew Hyland on the day, does this market have a pulse? September CPI inbound and hectic macro week. Turning to the wider economy, there are more than enough potential Bitcoin price triggers in the making this week. Economic data releases will come thick and fast from October 12th onwards, and with tensions reaching new levels in the Russia-Ukraine war, shocks to commodities markets remain as a curveball. This upcoming week is going to be a fun one. PPI, FOMC minutes, CPI, initial jobless claims, and retail sales, Clementi summarized. Of particular interest, he added, was the U.S. Consumer Price Index, or CPI, print for September, due on October 13th, which will form a major reference point for the Federal Reserve as it approaches a fresh interest rate hike next month. While the direction of CPI inflation based on prior prints is likely less of a mystery, each print tends to produce unusual market volatility characterized by, quote, fake outs both up and down. Should this month repeat the trend, speculative trades, both long and short, could wind up liquidated en masse. Expecting serious volatility to jump in with CPI and PPI, Michael Van de Pope confirmed in part of a fresh Twitter post on the topic, quote, be ready. Outside the U.S., meanwhile, Europe is also in the spotlight with events in the Russia-Ukraine war reaching a new magnitude in recent days. Any sudden developments, especially those involving fuel, have the potential to spark additional upset in traditional markets to which crypto is still correlated. Difficulty prepares biggest uptick since August of 2021. Internal developments in Bitcoin could form the basis for a surge in confidence as the week begins. According to current estimates, Bitcoin's mining difficulty is due to add a giant 13% on October 10th. So that's today, the day that I'm actually recording this video, right? It's biggest since August of 2021 and could easily enough take it to new all-time highs. The numbers make for surprising reading. Such an increase suggests that miner competition is increasing in line with increasing network participation. Yet Bitcoin price action is still near 2-year lows. Miners will already have extremely slim profit margins, with production costs for many likely very near the current spot price. Increasing difficulty and thus financial commitments, therefore, should squeeze profitability further, raising the risk of miner capitulations. Bitcoin miners just won't stop, analyst Dylan LeClaire wrote about the difficulty estimate last week. Forecasting where miners could start to run into trouble, on-chain analytics firm Glassnode placed significance on the area of around $18,000 thanks to the latest modeling techniques. Similar to the difficulty regression model, the price range between $17,000 and $18,000 has confluence as being an area that induced miner stress in June and aligns with numerous cost of production estimates, it wrote in the latest edition of its weekly newsletter, The Week on Chain. Should a price drop occur, however, researcher Checkmate nonetheless argued that it is, quote, extremely unlikely miners would sell their entire inventory, currently worth just under 80,000 Bitcoin. This risk could manifest as a second stage miner capitulation with around 78,400 Bitcoin still held in miner treasuries. It is extremely unlikely this full amount would be distributed. However, provides an upper bound gauge on the potential risks at hand, he concluded. So then it goes on, time for a Bitcoin price bottom. It does elaborate a little bit more. Sentiment data copies. So I'm going to include a link in the description if you guys want to be able to read the rest of this article, but I'm actually going to go ahead and touch on this here with my final thoughts before we wrap up the video. So as far as for the actual mining of this goes, you guys need to understand that when you're mining, you're using processors. A lot of people are using what's called ASIC miners for that of Bitcoin. And in order to use these things, you need electricity. And a lot of people are actually having to spend money to try and make money with this, right? Not just for the device itself, which oftentimes there's new upgrade models that come out and then you got to update all of that, because the whole point is you want to be able to process as fast as possible. When the hash rate increases, that also makes it more difficult. So that means the odds of you finding a block, being rewarded with that, with your Bitcoin, essentially being paid out for your contributions into this, that goes down. So there's this huge battle right now that we're seeing that even with the market being as bad as it is, players are coming in and saying, hey, I want to be able to mine Bitcoin right now too. So there's more and more competition. So the system has to adjust itself to be able to accommodate those circumstances, meaning making it more difficult. That way then you don't have too much Bitcoin being mined at too fast of an interval rate. So this is where we have these difficulty shift changes. I believe it's every week and a half. Don't quote me on that. I'd have to double check on that. But there's a time frame window where it reevaluates all these circumstances. The other thing to keep in mind is that if you're having to pay electricity to operate these machines, where's the money coming from to pay for that electricity? You're either having it come from outside resources, or you have to sell what you've already been mining, which is your Bitcoins. That's what this highlight in this article is kind of touching on, is they're looking at around 78,400 Bitcoins still held in miner treasuries. So the miners already having those in possession. Obviously, there's not two miners. There's a whole bunch of miners. There's mining pools as well. And if you look at that, it's like, okay, that's a lot of Bitcoin that if it flooded onto the market, it would drive it down a ton. But then how does that really work out in favor for the miners to make any kind of a profit? So there's this balancing act, right? You got to be able to maintain yourself long enough, but at the same time, you have to be able to sell something so that you can cover your expenses without causing too much of a damage on the market to cause fear and panic, and everyone starts selling even further, and then essentially just driving this down to nothing. And then you're left with all this equipment and electric bill, and you're just kind of screwed. So very interesting to see where we're at now, where this could be going at next. I wanted to give you guys an update on this. I am not a financial advisor. Again, please go do your own research. Thank you so much, my Patreon supporters. Double shout out thank you to We Love SafeMoon.com, Morad Shaker, Victor Vegas, SafeMoon Oz for being higher level patrons. Thank you to my YouTube members for your support as well. If you guys are new to the channel, don't forget to hit subscribe, hit the thumbs up like button. God bless, and we'll see you in the next episode.